It's about democratizing Gen Z entrepreneurs. Gen Z entrepreneurs making products and services for Gen Z audience. And as you can probably figure out from the composition of this panel, since I was closest to the Gen Z regime, I was made the moderator, and all our panelists are going to be giving their inputs around how Gen Z entrepreneurship can be democratized. I'll just give few data points before getting our panelists into action. If we talk about Gen Z, and I was just sharing backstage, the whole definition of Gen Z and millennial is a hotly debated topic. That whether it starts at 1996 or 97 or 98 up till 2012. But howsoever you may look at it, between millennials and Gen Z, if we talk about, we are looking at an audience of almost 50 to 55% when we talk about India. If I talk about startups, 2 in 3 startups who are raising funds are by Gen Z entrepreneurs. If you look at our unicorn list, almost 70% of those startups, if you see the founder's background or one of the co-founders, they are Gen Z entrepreneurs. So the timing is absolutely right to talk about Gen Z entrepreneurship and Gen Z as a customer. As a customer also, I must tell you that Gen Z individuals are very different in terms of their liking. They value purpose over money or commerce. They value things like ESG, environment. If in terms of working, they prefer, they call it digital nomads, working from anywhere in any format, gig working. So it's a very peculiar tribe, as they say, so to speak, in Gen Z language, to look at. And here we've got a very interesting melange of panelists who would give you a view of Gen Z entrepreneurship from their lens. We've got somebody from academia, industry interface. We've got somebody from Ecosystem Connect. We've got somebody who's been an entrepreneur as well as a venture capitalist. So I'm sure you'll be amazed by today's interaction on how to relook at Gen Z entrepreneurship. I'll start off first with our panelist, Kunal. Kunal is the founding partner at AdvantEdge and earlier worked with Carnation as well. He has been into the automotive space. His father was a household name, Mr. Khattar. In the VC space, he's heavily invested in EV and mobility, which is a hot topic right now. And in his conversations, I'm sure he speaks to a lot of Gen Z entrepreneurs. What I want to know from you, Kunal, is that how do you look at Gen Z entrepreneurs? Like, I know backstage you were saying money has no color. People could be from any age, caste, creed, religion, or political affiliation. We don't care as long as they can make us money. But when a 16-year-old comes and pitches to you, do you have any thoughts going on in your mind? Ki, I don't know, he's still in high school. Would he be able to pull off a business? Do you have a different sort of a checklist when you evaluate Gen Z entrepreneurs? What are the first thoughts that come into your mind when a Gen Z entrepreneur comes and pitches to you?
Sure. Thank you so much for having me. So, we've looked at over 2,000 founders now. We've spoken to them, coming from all sorts of stages. I think the most important thing about what we do and what we've realized is that the startup ecosystem and entrepreneurship is all about meritocracy. Doesn't matter what age you are, education, etc. The average age of the founders that we've backed is about 27, 28. So I think it's a combination of Gen Z, millennials, etc., etc. The beauty of it is, they come with different, the current cohort of entrepreneurs are very different to the old, what we used to see, 15, 20 years ago. They're much more digital. They're much more aware. They care about the environment, etc., etc. I think what you mentioned, Kartik, and we started seeing that as well. When we look at investment opportunities, I think one of the most important thing is we look for the concept called a founder market fit. And for us, that is probably one criteria where we prefer a certain profile of a founder versus others, because we sort of have a tendency to look at individuals without any lens per se. But it's always good to see if there's a certain cohort or a certain profile of a founder who understands the market or understands his own customers. And we've seen that predominantly, especially if you're a category creator. As a fund, we have a simple philosophy. We look for reasons not to invest. And if we can't find a reason not to invest, we go ahead and make that investment. But we've been extremely successful with backing founders who are actually fail founders and things like that. But with regard to Gen Z, what we are very pleasantly surprised and what's coming across now is that these are people who are actually grown up in the pure digital environment. They have built, they are digital savvy. They understand the customers. They understand go-to-market. They understand how to acquire customers online. So these are quality and traits that we look for, and we've seen that the younger founders have a tendency to be able to deliver much more effectively because of those qualities.
And when can we see things like Thiel's Fellowship, where venture capitalists and ecosystem players almost instigate you to drop out from formal education system and get into entrepreneurship? Or do we see in your fund a general partner who's 17 years old or 18 years old? How comfortable are you in doing something like that?
I think as a society, we still have kids who listen to what their parents say. So I think till we don't have that change, I don't know if we're going to see a Thiel Fellowship coming up in India. But I can honestly tell you that because we're a pure meritocracy-based system, I would say about 25-30% of the founders that we have backed have not come from Tier 1 institute. They've all gone to school and colleges. I wouldn't say that they haven't. We've looked at actually 2-3 opportunities where kids came to us from high school itself. And the reason we didn't end up investing in them was not the fact that they've not gone to college or completed that, but we just didn't probably believe in the business that they were trying to build. But again, the good thing about it is what we do is that, there is ultimately the only reason an individual in our space is going to be successful is his hard work and determination. It doesn't matter where he has gone to school, if he's gone to school, and what he brings to the table. And we've seen that time and again.
Right. I'm going to switch gears and go to you, Apurva. Apurva, I'm sure most of you are aware of. He heads venture capital and startups at Google, and previously he has worked with organizations like RateGain and Tech Mahindra. Apurva, just harping on to the same fact that as an ecosystem sort of enabler, so to speak, because you wear multiple hats, I know, but as an ecosystem sort of big brother, so to say, how do you see organizations and individuals like yourself can support Gen Z entrepreneurs to come up and even help them? I mean, raising funds is a secondary question, but at least be confident about entrepreneurship, helping them make a business plan, helping them connected in the ecosystem, and making them ready to take on the big leap. What kind of role can people and organizations like Google play in this?
It's a great question. So, if you look at last 5 years data, about 5,000 startups have got funded in India. So while we celebrate Indian entrepreneurship coming of age, I think the potential is almost 10x of what we are doing right now. We have a potential for 5,000 companies in a year to get funded. And that will only come when we increase the supply. And all the supply comes from Gen Z, Gen Y, youngsters who are fearless, who are bold, and who are committed to challenging the status quo. One way in which companies can help is support student entrepreneurship clubs. And student is not necessarily starting at graduate or postgraduate level. That's already too late. I think we need entrepreneurship clubs in schools. We need courses around entrepreneurship. We need curriculum change where you're not taught accounting, but you're taught business finance. Where you're taught how to build products, you're taught UX. You're actually taught life skills, more awareness, less education. So I think that's what is required. And you will start seeing the change. We are seeing that change now. Now you have funds like Campus Fund, which only invest in student startups in India. A lot of VCs are based outside my alma mater. So if you cross the road from IIT Delhi, a bunch of VCs are there in the SDA market. The reason for them being there is a lot of great entrepreneurs are going to come out of colleges like IIT Delhi. And if we can take it one step down into schools and increase the supply, automatically you'll see radically different and larger outcomes come out of the Indian ecosystem.
And especially when you talk about the audience, right? So if you talk about Google, right? One of the biggest sort of consumers of your products increasingly would become Gen Z, right? If we were talking about backstage that young people in schools now want to be influencer, they want to have their own channel, create a lot of content for peer-based review. With that happening, do you see a good fit from a business perspective also? Because I was talking to somebody in Silicon Valley and they say that Gen Z making products for Gen Z makes a lot of sense versus baby boomers creating a product. You would have seen in US, for example, a lot of kids, 3-year-old, 4-year-old, would create content of unboxing of products and toys for their peers. And they have the highest amount of visibility on YouTube channels versus a old person doing a review for a kid's product. So do you think it makes a lot of business sense also in your value chain?
I think as we think about founders or product managers who are more likely to create success in the market, it's very important to create diverse and inclusive teams. If you only have youngsters creating for youngsters, they might not be even aware of the pitfalls or challenges which the youngsters who use the products might face. So creating a more heterogeneous team is very important when you think about startups. Otherwise, you're going to just have confirmation bias, where the product manager, the engineering lead, the founder, everybody is going to think the same, and it's going to be a one-directional ship, actually reducing the chances of success. So personally, I advocate always to the ecosystem, to founders, to investors that encourage founding teams to be more diverse. You need adequate amount of women in leadership. You need youngsters. You need experienced leaders. I would caution against over-indexing on any one age group or sex or any kind of a social strata when you're building startups. Because you're trying to build startups which are going to impact hopefully billions of people. So you do need diversity.
Great point. And I'm going to move on to you, Anil Wali, sir. Anil Wali is the MD at Foundation for Innovation and Technology Transfer, FITT at IIT Delhi. He is actually at the cusp of the interface between Gen Z, when they are getting educated, to then they're becoming entrepreneurs or joining corporates. And I know you were laughing, sir, when we talked about Thiel Fellowship and disruptive programs where people would directly opt for entrepreneurship or go the alternate route. But on a serious note, what are your thoughts in terms of, I know it's a very tricky balance to maintain in terms of people doing their proper degrees, educational program, which obviously makes them more aware of the world and more prepared. But at the same time, do you feel that, especially with this Gen Z crowd, and I know you've been in IIT for a long time, you would have seen people like Apurva to people who are studying right now in IIT. Do you see a fundamental shift in the kind of students who are coming at IITs now? Do you see that there should be an option for them to go into this alternative career during the college level or even before at K-12 level? Or do you feel the regular approach of first finishing the education and then doing a side gig, as they say, and then taking the big leap is the preferred approach, especially in the Indian context?
I think, thanks, Kartik. A very interesting question. In fact, we at the Institute are grappling with such issues. To be honest, I think now taking from where Apurva left, why are there so many, what is the DNA of IIT Delhi that is able to produce so many, their alums are able to produce so many of the unicorns. So if you look back and see what exactly contributes to our alumni creating such fabulous enterprises. So it has got something to do with the culture, the nature, the environment that we have created. We actually don't distinguish what you are actually going to do. But yes, at one level, we want the students to complete their education because everybody can't be Bill Gates or those dropouts. That's one, because that's also a sort of a commitment to the education, to the parents of the students and whatnot. We get many students who are actually working on their ideas. We do encourage them to keep working on their ideas, as you said, the sidekick. Build on them, think through, work with entrepreneurs, work with investors, while at the same time not totally neglecting your studies. Who knows that because we have to be very clear that all ideas are not going to make a mark in the marketplace, for one. So we want to actually de-risk their decisions, their whatever approach they adopt towards building their idea on their ideas. We have several examples of companies. I think some of them might have actually come to you all, where they might have needed funds. They were grappling with many things simultaneously, be it education, be it talking to investors, be it talking to competition of all the people. I think there are very interesting stories which I can narrate maybe at a different platform, how the students have actually navigated through all that with our help. In fact, one of the competitors did mention to me after there was an arbitration which was going on, he says, your boys are very, very smart, which indeed they are. They are. So coming to the larger point, we are actually not putting any restrictions whether they should be finishing the studies first or going for startups. So we leave it to them, one. Second thing is, at a broader level, at the macro level, we feel that entrepreneurship is an important component of engineering education. Accordingly, we try to build capacities of the students while still they are pursuing their degrees. Be it, let's say, courses on entrepreneurship or modules of that, design thinking, intellectual property, what it may be. But these are some of the components by which we try to ensure that they do not lose out on their studies, but at the same time, keep their interest alive on their ideas. Okay. Yes.
No, absolutely. And I know in West, I was looking at a concept in which like they have TUs in Germany, Technische University, and similar organizations. What they do is they believe that there is a merit in combining top tech institute students with B school students, for example. Because then a lot of times there is a bias towards product development, R&D in organizations like IITs, and as people like Kunal will tell you that they look purely from a numbers perspective and the business model, which sometimes even Gen Z entrepreneurs who are very tech savvy may not be able to articulate well and sort of present to people like Kunal. So do you also see an opportunity to create that ecosystem connect with the business folks and maybe marry them in some way so that when they pitch to investors or ecosystem players, they are able to present a strong front?
Yes, Kartik, it's happening. In fact, this evolution is happening. In fact, when we talk of strengthening the ecosystem, this exactly is the objective of that particular one. That is, the techies can keep on working on their ideas because, we have a bias that we tend to focus on deep tech startups. But I think what they normally, not always, sometimes miss out on is the business side of it. This is where I think people like Kunal and Apurva come in. At incubators, this is one of our objectives is to curate all these startup companies so that they score well both on the idea side, the technology side, as also on the business side. Because one of the reasons why we admit them in the first place is that if only we are sure of the decent business plan around the idea, then only they are into the game. Otherwise, we don't want to. We also would want to de-risk as many of the business plans as possible.
Right. And I'm going to come back to you, Kunal. So talking about Gen Z entrepreneurs, and I know there are so many stories around, young entrepreneurs who immediately experience a lot of growth, raise a lot of capital. There are issues around managing them, so to speak, right? And I'm sure you would have experienced similar situations in your career as well. How do you feel as a venture capitalist or as a governance board member, those situations can be handled? Because I'm sure over the years, people like yourself are used to a certain structure, a certain form of governance, a certain form of management style reporting. But with very young folks who are truly disruptive, they sort of challenge the status quo. They do not like boring meetings with people in suits, right? So how do you handle such a crowd in your portfolio?
Yeah, no, absolutely. Well, we don't wear suits. I think we just wore because we wanted to.
We are only wearing a jacket for Kartik.
No, so I think, let me start off by saying that I'm so happy that, we are now creating more job creators than job seekers. I think fundamentally that augurs well both for the country and for the startup ecosystem. And we've all read about the fact that we've had 100 unicorns. So suffice it to say that the startup ecosystem is on fire and doing very well. I try not to use that phrase to describe the EV ecosystem because that literally goes into a literally different meaning. But the entire industry is doing well as well. So to your point, yes, there is, 100 unicorns, honestly speaking, is an outcome of a valuation that a third-party investor has given. We are pretty conservative in our assessment. So we think a valuation is not a financial outcome based on a capital being raised and a kind of dilution that you're getting. The value of a business comes from the kind of customer satisfaction that you're able to build, and you can't put a price to that. As an investor, we typically identify opportunities in two buckets. Either you're a category creator or you're entering an existing category with an insight that is significantly going to improve the experience of a customer. So if you're creating a new category and if you're a technology or a hardware company, we actually prefer that you remain undercapitalized for the first 3 or 4 years till you achieve what we refer to as product market fit. I think one of the challenges that we've seen, especially in the last couple of years when we had excess liquidity, is that companies without product market fit were able to raise substantial sums of money because there was so much of liquidity in the market, and that helped them increase the valuation. But ultimately, they ended up blowing up a lot of capital because they had to grow into that valuation. That's another challenge that we've seen. And I can honestly tell you there are a lot of VCs that encourage funds to burn money to grow business, because ultimately if startups become profitable, they don't need VCs, right? So basically we'll be unemployed if all the startups become profitable. So there is an inherent bias where VCs actually encourage companies to burn more money. But I think what's happening now is the music has stopped. I think we are experiencing a funding winter for sure, which means everybody is going back to brass tacks and now focusing on unit economics, path to profitability, etc., etc. These are traditional concepts that for some reason we were missing. I mean, you have to also recognize the fact that we've had almost a 15-year bull market from the great financial crisis of 2009 up till 2022. So actually a majority of the founders that we have never really experienced a slowdown, which I think now they're realizing that it's a much more tougher business. The good news is valuations are more realistic. And I think, when I was in business school, my finance professor told me that if you ever want to make money in investing, then sell when everybody is buying and buy when everybody is selling. So now that we are seeing fewer and fewer deals happening, we're actually pretty aggressive and active. And we feel that the kind of investments we make today are the ones that are going to give us alpha returns from the fund's perspective.
And I know why you're saying, because you're raising your third fund, right?
We are in the process of raising. Fortunately, our two funds, previous funds, have done extremely well. I think what helped us was we were a thesis-driven, sector-focused fund. And for us, the worst period was during COVID, when we are a mobility fund, and pretty much all our companies, all our businesses were down to zero in terms of revenue, and all of them survived. So now I think for us, this is a walk in the park now. We're in a much better situation, both at the macro and at a sectoral level. And if there are two sectors that are actually doing much better, it's mobility and EV, which are the two focus areas for us.
And talking about raising funds, and I'll have you also chip in, Apurva, that this Gen Z is also supposedly very comfortable in deploying capital in startups. If you look at platforms like Grip, I know you are part of the board as well, Sati, Tyke, there are a lot of these platforms on which almost 80% of users are actually Gen Z. So they're very comfortable in also becoming investors in the startup ecosystem. What do you have to say to that?
I would just say be careful. Be careful because you need investing maturity. It's a highly illiquid space. It's also a highly risky space. Do check out whether these platforms are regulated, not regulated. There are concepts like community CPS. Yeah, so I would say my advice to all the youngsters is be very careful, because investing in unlisted assets is prima facie very risky. You require a lot of investing maturity to be able to gauge the success of a company, value it, price the risk in, and invest. So it's great to see young investors coming in. They're going to go through the same learning curve which me and Kunal went through. So they're going to make bad investments, hopefully fewer than us, learn from it. But I would ask people to exercise caution because a lot of these platforms might not be on the right side of our legal frameworks.
And Kunal, do you see any Gen Z LPs in your funds, or do you talk to entrepreneurs who have made money, who are Gen Z entrepreneurs and want to invest and become proper investors?
No, so yeah, we have a couple of family offices. And the good thing is, I think there is a very high engagement and interest that we are seeing from the second or third generation of these family offices. And these are typically people in the age of, well, maybe not 17, but definitely 20 to 25. I think startup investing is something that people are looking for, not only for diversification, but I think what the second and third generation want to do is they want to create a success story outside of their family businesses. So there is a lot of interest for them to come on board as LPs. And they also are very active and keen to see how they can support and mentor the portfolio founders per se. So I think that's very, very good for the system. The other thing I can honestly say is that now that, we've seen, so when I started Carnation, of course, there was very few options of capital available to us. There were a few private equity guys, there were one or two growth capital funds. Today, I would say that there would be anywhere between 300 to 400 pools of capital that's available to you, not just the friends and family, but you've got angels, super angels, you've got companies that are syndicates where you have the ability to raise money, you have micro VCs, seed VCs, you have early stage funds, you have debt capital, and you have the larger hedge funds and private equity. So with that, there is so many different pools of capital available. I think that's an even more important disintermediation of capital and democratization of the whole startup ecosystem. And now that we've seen about 10 to 12 years of investment, we're actually seeing exits and liquidity back. So we are experiencing 2 or 3 exits every year from investments that we started doing back in 2005-06. What that means is that now you'll have a second cohort of angel investors who have now liquidity coming back to them and they're ready to deploy. So I would say in every deal that we do, we actually get about 8 or 10 young angel investors who are coming in investing along with us, which is great because they bring different skill sets to the table.
Right. I want to get all three of you to have a thought on a particular topic, and then I'll take audience questions. When we talk about entrepreneurship and Gen Z, most of the conversation typically centers around tier 1, tier 2 cities, right? Even some of the events Google does, hackathons, whatnot. You see a lot of participation from Bangalore, Bombay, Delhi, Hyderabad, the usual towns. But what are we talking about when we think about promoting entrepreneurship in Gen Z in Bareilly, Ulhasnagar? Do you look at these towns when you go for road shows, when you're looking for investors or entrepreneurs? Do these towns also come into your mind, and how are you addressing the opportunity?
So I think there's two ways to look at it. So one is, of course, when we think of tier 3 towns, we automatically think we look for startups out of these towns. But I can honestly tell you, I wouldn't be surprised if almost 40 to 50% of my founders are actually from tier 3 towns.
That's their hometown.
Yeah, that's fine. But at the end of the day, you have to also, we recognize the fact that these are individuals who have come from maybe government schools, studying in vernacular languages and have really made their way to the top, where today they have the ability to raise capital and build successful companies. They may be sitting in Bangalore and Gurgaon. Ultimately, it takes a village to build a successful company. So you may have talent coming out of these tier 3 towns, but unfortunately the ecosystem doesn't exist in these smaller towns, right? Entrepreneurship is hard, right? There's only a 20% chance of success. So you have to do what you have to do to try to increase the odds of success. I just feel that thinking that you can sit today, sitting out of a tier 3 town and build successful companies will continue to be difficult because there's a lack of talent to build successful companies. Of course, now we talk about work from home and the world is becoming flat, so that's changing very fast. But we are seeing now some companies building successful startups in these cities, catering to the needs of those small towns themselves. So that is happening for sure.
Apurva, what are you and Google doing in terms of promoting entrepreneurship in Bharat, as they say?
So I'll first say, we need to flip our definition of tier 3 and tier 1. Living in a crowded city where you can't find time to build personal connections, where the air is overcast with soot, is that tier 1? Or staying in Jaipur or Indore, great air, easy to meet people, cost of living is low, is that tier 1? So I would firstly challenge your definition of tier 1 and tier 3. I think this is all in our heads, that this is a tier 1 town, this is a tier 2 town. We're actually seeing a lot of talent migration happening from tier 1, like you call it, to tier 2 and tier 3. One of the SaaS startups, which has created a tool for VCs to manage their portfolio companies, actually works out of Udupi. The whole team works out of Udupi. They are never going to move to a Bangalore and Delhi. Zero attrition, very profitable, very happy, very productive, because every day is spectacular. So I would urge everybody here to rethink what's their definition of tier 1 and tier 3. That being said, if you actually think about towns which are smaller, where the number of people is less, we are doing a lot of things. So we organized an event in Gujarat called Garvi Gujarat, where 100% of content was in Gujarati, all the slides were in Gujarati, all the content, speakers, handouts, office hours, everything was in Gujarati. 2,000 founders turned up. We did it in Surat. We are planning to do more and more of these. Phenomenal demand. Some of the best developers, apps actually come out of Gujarat. And I'm sure you will have similar stories out of UP, Bihar, many other states. Yeah.
And what can academia do? Do you also partner with colleges and educational institutions in these geographies?
Kartik, let me give you another contextual information. See, what happens, we manage a lot of government schemes, the private schemes. So aside of these non-metro towns and cities, I will not use the definition, which you challenge right away. When we look at the data, particularly in terms of the startups or ecosystems that have been supported, there's a skewed ratio, particularly with regard to how many innovators or entrepreneurs get supported in the large cities. The picture is not so very rosy generally in the smaller cities, except for few down south, which have mature ecosystems. And I think I entirely concur with Kunal when he said the ecosystems in many of the far-flung areas or smaller towns and cities is actually not developed or mature. Now, on behalf of the government agencies or on behalf of the academia, we do tremendous outreach programs. So our job is actually to find out people. First, two things. One is try to strengthen as much as we can the environment, that is make people aware of the policy support that is available, okay, and try to create local ecosystems in colleges and universities to ensure that they put in place all the the tools, the equipment, etc., either at the incubator or in larger cities, and have linkages established. And third is, of course, the funding part, for which, of course, we go and do the outreach. Because in some of the schemes, we do tell openly, you have to try it out. We are giving you money, which is nothing but the freedom to fail. I mean, just imagine the catch there. So the thing is, if they know that, of course, there's nothing which they are going to spend, but there's government or maybe private entities, the CSR money which is there for them to try out their ideas, I think that would be some of the small elements which can actually strengthen the ecosystem. And that's what I think your objectives are, about how to bring them onto the mainstream.
Right, and I love that phrase because I was reading a book and they said that Gen Z actually likes to fail and they don't care, unlike some of the earlier generations who used to look at failure in a very negative connotation. We are almost out of time. We can take a couple of questions from audience, if there are any. Do we have any questions? So we are almost out of time. Last closing remark, maybe one line each from you, that how can Gen Z entrepreneurship be fostered in India? I have one sort of line of suggestion that maybe we can create a platform or a forum which can be maybe supported through AIMA and similar organizations, where we have got so much of skilled experts and subject matter experts, which I can see in the room, who can probably sign up as a mentor to Gen Z entrepreneurs. So if I am a Gen Z entrepreneur, very good in tech, I don't know how to manage finance or how to build a team, I don't know HR, and maybe I can get on-demand support from some of the experts who are in this room or part of the larger AIMA fraternity, and maybe can get that right support at the right time so as to support my business. One quick line from each one of you on one tip or idea like this to help Gen Z entrepreneurs.
I think before a tip, I think what's important is you raise the point that Gen Zs are willing to fail. 70% of the founders we backed actually have failed businesses and they're trying again. So we love failed founders. The advice to my founders is always there's no such thing as failure in entrepreneurship. You either succeed or you learn. And then you continue to build. Just don't give up.
Well, the message is India is a huge opportunity landscape. Address any of the challenges, and it could be $1 billion enterprise or an opportunity.
Apurva, closing remark.
There's no better time to build. People talk about spending downturn, people talk about recession, but there's no better time to build. You have generative AI, a lot of things can be automated. Your time to market is far faster. Government policies are becoming easy. So go out and start building today.
Thank you so much, Kunal. Thank you so much, Anil sir. Thank you so much, Apurva. Thank you, audience, for being with us.